Good afternoon, traders. This is Christian from Tribeca Trade Group. Happy Friday the 13th. Happy Friday. Hopefully, you guys are ready for the weekend. What a week. What a day in terms of volatility. Where did we finish for the week? The SPY finished up 8.6% for the day. The Qs finished up 8.5% for the day. The diamonds finished up even more than that. IWM trailed a little bit, but still did fine, I think, for the day. Finished up 7% for the day. Then gold, bonds, silver, all got beat down today. Big moves in the other direction. Big story here as well was the VIX, down 23% for the day. I thought that was very telling. I think it's progress. The level that I was looking for the VIX was to get below 55, but things, you can't have everything that you were looking for, all in one day. I think this is a move in the right direction. Did the VIX change directions? I would not say yet. I think to be continued. And I think that you kind of have to take these days, as fast as we're moving and as volatile as this market has been, you have to take it one day at a time and realize that bottoms are a process, trading is a process. Continue to control what you can control, and make sure that you're locking something in here as we go along. There's a lot of things to talk about. There's a lot of things that I've been talking about. I think as most traders are probably feeling a little bit of you know of being a bit tired for the week. I'm definitely at that point now that it's Friday and the market's closed. Where would I like this VIX to get to? This is something I put out a checklist earlier in the day of things that I wanted to see happen for me to kind of really to feel a little bit better about adding some risk at this point. And I'll walk through that checklist with you. But it's tough to have everything on the checklist be hit all in the same day. So it's a process. I did feel a little bit more comfortable today. I really hadn't added much risk this week. For the most part, this week I was day trading, over and over and over, and really being disciplined in my day trading. I did not want to incur any big losses. And I think besides I think Monday was the worst day because I was wearing some positions into money. But besides Monday, I think I made it out of the week, pretty well. And I think for members, I hope that, of course, I can't give anybody recommendations or tell anybody what to do. Everything is for information purposes only. But telling people what I'm doing and where I'm not taking risk and really using my experience from back in 2008 and some of the things that I've seen even before that back in 1999 2000, and as well trading things like the flash crash and so forth, and even the end of the year 2000, 2018. Sorry if I mess up a couple things here in this video. It's been a very long week, so I hope you understand. But yeah, so why 55? So I wanted to see, notice since this VIX has been ripping, and we made a new high today of 77.57. But notice that the price here hasn't really ducked under the 5 period moving average. I use that 5 period moving average quite a bit because it tells me what the short term trend is. And sometimes, even though you can have some crazy looking candles, if price doesn't duck underneath the 5 period moving average, then the short term trend hasn't changed. So I don't think the short term trend has changed yet, but it's a step in the right direction. I mean, we saw one of these kind of in here. We saw like an inside day. We saw this little move where we ducked almost below 30, but we didn't get it. This was kind of gave a false signal, and then we ratcheted back up here. So there were some great observations in the trading room, and the Tribeca Trade Group, the Tribeca Trade Group room has been on fire with basically just with the contributions that everybody is making. We're all trying to figure this out together. So I couldn't be happier about the dynamics in the trading room, everybody basically working together, rather than, what normally happens during these types of weeks is people really have short fuses, people really lose their tempers, and I think for the most part, everybody handled themselves, very well, and we got through this week together, and that's the whole point of this is to, number one, everybody wants to make money, but it's also learning and knowing how to deal with these situations and being prepared and being able to handle it. Because some traders will, we're going to hear about a lot of traders and funds blowing themselves up this week. There's too many things that went in directions that they're not always supposed to go in. So if you survived this week, congratulations. And realize that this is not easy, and the weeks like this is how people blow themselves up with in terms of risk and so forth. So I hope my approach helped you all this week, where I basically said, hey, I'm going to wait for some confirmation before I add some trades, that are going to be held versus just day trades. And also on my day trades, every day trade that I did this week had a stop level. It also had, for the most part, most of the trades had targets built in, but really the stop price is the main thing. So that's always the key thing, is to think about the trade before you pull the trigger and go ahead and buy or sell. Where do you think this is going, and where is it going to not? And where are you going to get out of things? Because I certainly had some trades, that day trades that did not, where I had to stop myself out, and it's a bummer when it happens. And it's a bummer for me to have to say, like, as soon as like I get into something, and 10 minutes later, if I didn't take a target, and then the next thing you know that the stock has gone the other way, then I you got to get out of it. But these are paper cuts, and you live to fight another day when that type of thing happens. So let's go over, first of all, the price action for the day. So one of the things that were on my checklist that I sent out to members earlier was I wanted to see the S&P hold the gains for the day. I didn't want to see a give back. Well, we got a little bit of everything today. We did get a give back. The market basically bent but did not break. Right, so this got a little bit iffy. We bounced here. Some traders in the room actually added some risk here, did a great job with doing this. But you did get opportunities, right? Like I didn't do any chasing. I kind of waited at least to the first half hour. I did a little bit of putting on some trades into this support because, and then I waited to see if we were going to hold that. Of course, when we went lower, it was a bit frustrating, and I did stop myself out of a couple trades right in here. I think Apple was one, and Apple I could have taken a target at 263. I think I had my target out maybe a dollar too far, but again, that happens. And then basically what I did was I looked at a couple trades that I said, hey, here's a couple trades where I'm okay with actually holding here. I got a question earlier and saying, hey, are these trades that you're going to go long? And I said, no, they're just day trades. But these were trades that I went over in the pre-market, and this was the day that I felt like was the day for me to actually hold some positions. I think that we just went through enough of pain through this week. One of the tweets that I saw from Bloomberg, Tracy Alloway, was saying that equities, there was a 7.7 standard deviation move. That is close. I hate to say like 100% that yesterday was a capitulation day, but a 7.7 standard deviation move yesterday, that to me is close enough. So that kind of compelled me to add some risk. And I still went into positions where I've got a level to trade against. That's the important thing. So Visa, that level's 159 on the weekly chart. And AbbVie was the other name that I went into. And that stop is right around 77. Notice very different looking. AbbVie actually held the top of value. All right, so the performance for the week, I mean, it's crazy. We talked about the VIX and so forth. We talked about bonds and gold were both off. I mean, just crazy performance. And then for the week, just to recap this week's performance, which if you don't want to look at this, that's fine because it's pretty nasty. But first of all, on the top line, this was one of those weeks where everything went down. We've seen weeks before where everything goes up and it's a head scratcher. This was also one of those head scratchers where everything went down this week. SPY's down 10% for the week. IWM down 17% for the week. Q's down to a little bit less. They fared a little bit better. We talked about how the Qs were behaving, had some more strength to them earlier in the week. That was but one of my initial thoughts going into the week, and you could see bonds and gold went down as well as international. It looks like international developed went down more than emerging markets. So fascinating stuff here. Tech fared a little bit better as well as healthcare. Software did okay. Consumer staples still down 8% for the week. But if you look at to the laggards for the week, whew, oil services down almost 40% in 1 week. That is atrocious. That is really bad price action. Some of the worst that I've seen in a week. So I wanted to talk a little bit about 2008, right? That was something that I've traded with, traded before, traded through as an institutional trader on my days on the desk at Merrill Lynch. And traders have asked me, well, what was that like? How did you cope with it? Well, I think there was a lot of similarities with what we saw this week versus what we saw in 2008. The magnitude of the moves, the magnitude of the move in the VIX, as well as some of the performance that you see in front of you, is very similar to 2008. One of the differences was the speed was faster. Now we're not necessarily done. Like I don't think that we're out of the woods by any means. And that's why you really have to control your risk, what you can control. But I remember in 2008, it went on for a long. It felt like it went on for a long time. There was bear market rallies that happened, and then a couple days later, we were back at new lows. So we don't know how long this is going to go on for. No one has a crystal ball and knows that. I do think that there's positive things like companies are buying back stock, insiders are buying back stock. So I think that's a positive development, and I'll kind of wait for more of those things on my checklist to be to get ticked, right? So where do I have this here? I think if we go to back into Slack, there was an email that I sent out that had a lot of different points in there. I'm borrowing Mr. Wolf Metric, which I think was an excellent tweet to talk about that. But my checklist was basically here. S&P to hold the gains. We did after going back and forth. The VIX below 55, almost. IWM to keep pace with SPY, almost. Market breadth to not roll over. It did. And then it came back. Copper to hold gains. It held some of the gains. So you had a lot of almost on there. You had a couple that did work. So that was enough for me to take a shot on a couple things. And then my whole approach is going to be to kind of scale into things because we don't know for sure if we've completely have put the bottom in, or it could be that we rally a couple days and then we actually go lower next week, right? Those are all things in the cards and all things that you have to think about when you're taking on new risk. So for example, a couple of positions that I added, Visa and AbbVie, I'm scaling into. So if they do go lower next week and they go further into my support levels, I'll be looking to add to those positions. I'll also be looking to take targets in some things to make sure that I'm not getting overexposed. That is one of the main points, is that to not get overexposed in this market. So those are a couple of lessons from 2008 is to not get, of course, over the tips of your skis with putting on too much risk, to make sure that I'm taking profits on some things and locking in some gains, right? And not get greedy. That was some of the things that even in my day trading this week, sometimes I set a target a little bit too far ahead, right, and getting a little bit too greedy. So you have to be able to kind of take what you can get right now in this market. All right, so I think we'll end the video there. We also did see some call buying. I mentioned that the institutions, they're the ones that really drive the market. The little guys, us retail traders, while we can think that we can outsmart the market, what we want to look for is some institutional buying. We started to see that. We saw some call buying in a few different names today. Salesforce was one that came to mind, but we need to see that more and more, right? We need to see the institutional players, step into this market in a big way, and that I don't think we've seen yet. So again, if you've survived this week, congratulations. You take some notes on what you experienced this week. Everybody makes mistakes on certain things. Write those mistakes down so that you can try to eliminate. No one's going to be perfect and make zero mistakes. But the best that you could do is learn from them. And sometimes if you're on the wrong side of the fence in trading, don't stay wrong, right? You cannot be rigid, you cannot be stubborn in these types of markets, or you're going to have a major problem. So that's it for this week's video, I should say. A lot more analysis to do this week. I hope I helped you. And if you have any comments, questions, you can email me or send me a private message in the trading room. Guys, have a great weekend. Thanks, everybody.